When you look at the stock market, you will see fraudulent, manipulated prices thanks to central banks. But we've seen corporations follow along and do the same using fake accounting in order to boost confidence and, of course, corporate earnings. Every so often, this information comes to light, a crack appears, and suddenly the tectonic shifting of the plates swallows everything whole. You came here for the truth, so let me unveil that for you. Today we're going to look at why every investor is scared. Let's begin with this. Fed's asset holdings. This is what every investor looks at and hopes it never changes. The Federal Reserve is holding on to approximately $4.5 trillion worth of garbage. And you will see that their plan is to reduce over the next few years. Balance sheet runoff starting Q4 2017 at $10 billion per month, essentially nothing. Cap raised by $10 billion each quarter until it reaches $50 billion a month. So at that point, it just barely starts to scratch the surface at how much they will start giving up. If you think about it in this chart here, let's assume around this time frame here is 2021. At that time, the Federal Reserve still has upwards of $2.5 trillion worth. 3 years from today, they still have $2.5 trillion on their balance sheet. Now, we are making the assumption that between today, the beginning of 2018, until the year 2021, there will be no setbacks. Another 3 whole years. Are we to believe that? Maybe. If you want to believe it, that's fine. However, I would suggest to everybody that all along the way, and I've shown you this probably 100 times at least, that along the way, the central bank balance sheets have completely correlated with the rise in the stock market, particularly the S&P, but other markets as well. They're completely correlated. You've seen those charts. Don't you think for a second that it will also be a factor on the way down? Now, I know some people will immediately think to themselves, the Federal Reserve's balance sheet was moving approximately sideways for a few years after QE3 ended, and yet the market went higher. So then the money GPS, this guy's wrong, right? Or wrong? All central banks have been printing money. And when you look at the G4, G5, or whatever balance sheets as a whole, you start to see the bigger picture. It's not just about the Fed. Remember that if one central bank around the world decides to print, they don't necessarily have to put that money in their own country. It could find its way to a different country, and in fact, it has. The US has been absolutely the benefactor of all of this monetary quantitative easing, also known as printing money out of thin air. So you do correlate the central bank balance sheets and the stock market, and do you not think for a second that it will not correlate on the way down? What do you think? I don't know, you tell me. A lot of gurus out there. We forecast G4 balance sheets will peak and finally begin to decline in Q1 2018. Further evidence that central bank support for markets is shifting. I'm not saying that. This is Bank of America Merrill Lynch saying that, right? So when you see this chart, you know where it's gone since the financial crisis, clearly, obviously. Saying it's going to peak right around now, and then it's going to begin to decline. All right. So we are going from a level of about $15 trillion that they're telling us about. $15 trillion. all the while, stocks have been increasing. Different sectors have been obviously better than others. Different stocks within those sectors have been better than others. That's how markets always are, but it's more exaggerated this time around because of the central banks acting this way. What we've seen is central banks doing their thing, printing money, supporting certain asset classes, the toxic garbage that nobody wants, buying up shares of different companies, right? Then you get the investors out there, the big investors, and they are going ahead and they are following along with the central banks. Okay, they're buying US equities. All right, we'll do the same. We'll just choose the same ones that they're buying. Everybody follow the leader. Okay, so that's happening, right? All the big money, all the trillions and billions, they're going that way. Then the retail investors, like little minnows following along, not making any waves, okay, because they're insignificant. They're following along, doing what everyone else is doing, the big boys, and they're obviously able to profit from that. At least they're seeing their assets appreciate. They probably haven't taken any of their earnings at this point, so they haven't really profited technically unless they're making some passive income with dividends or what have you. So then we see here, this is a predicament that all central banks are in because they know on the way up, everything is moving great, and they need to somehow pull the crutch away from the system and not watch it collapse. So they do it at the slowest possible pace. My thoughts are that with interest rates rising, it's going to ruin everything. Now in Europe, obviously, you're seeing negative interest rates in a lot of cases. Look at Japan, what they're doing. But you take the example of, for one, Canada. Look at the US. Other places have begun. And that has an effect on the housing market. It has an effect on lending to other people. Look at the home equity line of credits. Look at credit cards. Look at the different assets, not assets, but different tools, let's call them, that people use that have some sort of debt attached to it. Variable, more interest is associated with that. Or if not variable, if it's a fixed, then it is simply a matter of time before people feel the pain. All right, moving on. Janet Yellen. Now, I'm sad to see her go. I got, a few words for her, but of course, meet the new boss, same as the old boss. The Federal Reserve is working to relax. Check this out. I've talked about this several times before. You've heard me rant on about this. Talked about it in my books. The Federal Reserve is working to relax a key part of the post-crisis demands for drastically increased capital levels at the biggest banks, according to people familiar. A move that could free up billions of dollars for some Wall Street giants. Check this out. Central bank staffers are rewriting the leverage ratio rule, a requirement that U.S. banks maintain a minimum level, basically it's next to nothing as it is, of capital against all their assets to better align with the recent agreement among global regulators. The people said that the Fed effort is drawing opposition from the FDIC because they can't even bail out a small bank, let alone a big bank, with the authority over banking that's still led by the Obama appointee. Now, the way I see it, they said they would have to increase last time around. They barely did anything. Look, if it's coming from a rate of, let's say, 3 to 5%, and they say, you got to increase, all right? You better, okay? Or else we're going to give you a slap on the wrist. And then what do? They increase to 8%, maybe 10%. Depends on the country. Depends on the regulations they put in place. They're so nice. So very nice. And they never really push ahead. It doesn't matter. Even if they don't get it up to the levels, the Basel Agreement and all this garbage, that they will somehow just go ahead as planned. It doesn't have an effect. But anyway, even if they bring it up to 10%, 12%, hey, 15%, it doesn't matter. But what they'll do is they'll simply drop them. They'll drop them, allow banks to lend out more and more and more. And that's the name of the game. We need to get people lending at this time, because we know that as interest rates are rising, we're going to see less people borrowing. But if we relax the lending standards a bit, maybe we can just, hand out to some people who really, maybe they shouldn't have a mortgage. Maybe they shouldn't have that car loan, but hey, come on, be nice. Mean reversions in a bull and bear market. Look at what's happening here. I mean, you can see the details for yourself. I just wanted to quickly show you where the market has gone. It is incredible. I mean, the way down is going to be, it's going to be like a Niagara Falls, okay? But here, if you're interested, you can see the reversions here. Alan Greenspan, he gets a lot of heat. There's obviously being a central banker. If you read his book, The Age of Turbulence, you'll get a different image of him altogether. You can actually see his downfall. He totally sold out during his time at the Fed, but he does point to good things. I'm not trying to back him up or anything, but during his, when he comes out, he's interviewed, his speeches, whatever, his books, he points to the right things. Obviously, everybody knows him because of his comment of irrational exuberance. There are two bubbles. We have a stock market bubble and we have a bond market bubble. He's pointing to that. It's very clear and says, at the end of the day, the bond market bubble will eventually be the critical issue, but said, don't worry, not right now. We are working, obviously, toward a major increase in long-term interest rates, and that has a very important impact on the whole structure of the economy. That's what I was talking about before. Won't go into it more, but essentially he's talking about the bonds being a very big problem for the future, for the foreseeable future. I obviously will agree with that. The bond market is just utterly massive when you think about it. The fixed income, a lot of governments are dealing with a crisis here because it's these governments that are the next source of problems. The big problem, there's a million problems, but ultimately government debt, all of these garbage bonds that are out there, and nobody is going to want to pick them up, and that's why the central banks will have to continue to print money. General Electric reveals SEC investigation into the accounting. All right, I won't get into the article. Essentially, guess what? GE was lying. They had these fake accounting. They're no different than Enron. We witnessed this over and over and over again. If you want one of the best books that talks about, from the 80s onward, it is Infectious Greed by Partnoy. Okay? And Partnoy talks about this better than anybody as far as I'm concerned, all the books I've read. He did such a great job. He's not as, let's say, exciting as Michael Lewis, for example, but that's more of entertainment type books. Okay, if you read Moneyball or all of his different books, but when you read Partnoy, it's kind of more just informative. And I'm a type of guy who's, I'm excited by so-called boring things. So this is something to read if you're interested. He talks a lot about this, about the Enron scandals and everything else. Okay. I talked about this before, universal basic income. I don't even want to get into the details of universal basic income, but you know the deal. In this case here, Stockton is going to get their version of universal basic income. There's a bunch of people who are now about to get families. Right here it says, for 1 year, several dozen Stockton families will get $500 a month, no strings attached. That's the way it's going to work. And then, of course, if you voluntarily join the program, you collect their data and you basically see how they're dealing with it. Are they just spending it frivolously? Are they able to get back on their feet? Has it helped them? Has it done really nothing? And that's basically the point of it all. They're doing testing. They're doing testing in different countries around the world, in fact, and this happens to be just one place. Last but not least, first ever self-driving delivery on the public road sees groceries dropped off in the Bay Area. So you can see the individuals are still behind the wheel technically, but the robots have been driving. Robots, automation, taking over every which way. We can see that happening. That's all for this video. If you found it informative, last but not least, give me a thumbs up, please. And join the other approximately 84,000 at the time of this video, 84,000 subscribers. We are gunning towards 100,000. I hope that you will join me here. If you are one of the new subscribers, hello to each and every one of you. You'll find out very quickly that this channel is very different from all the rest. And you'll see why as time goes on. If you found the video informative, I know you'll find my books, The Money GPS, and my new release, Global Economic Collapse, even more informative. Check them out. Links are in the description of this video. Take care.